Good morning, everybody. Welcome to the Flow Show, Monday, the 1st of July. The second half of the year begins. It's been a quick one, this first half, going under the bridge, but here we are. Soon be Christmas. Hope you're doing well. Morning, Kate. How you doing, mate?
Hey, good morning, Ryan. Good morning, everybody. Yeah, as you say, it'll soon be Christmas at the speed this first half went. So I guess we should start to prepare our wish list.
Oh, yeah. I've got a big wish list. Don't worry. You'll hear about that later on this year. And in the meanwhile, let's see if Christmas is going to come early to us and trading this week. Let's get straight into the news. Lots to go over today. Over in China, PBOC fixing round about the same level they did on Friday, 1265 versus 1268 previously. So they're keeping things pretty steady over there. We have had some data out from them as well, PMIs and whatnot, both sets of PMIs, the private and the state numbers out there. Manufacturing PMI coming in unchanged at 49.5. Non-manufacturing seeing a little dip down to 50.5 from 51.1 expected and prior. And then we've got the, as I said, the Beijing manufacturing PMI showing an improvement, up a pip on last month, beating expectations by 3 pips to 51.8. So according to those numbers, things not looking too bad, except for the prior manufacturing one, the state one, that is. China's Xi has been talking up China-Australia relations, saying that healthy and stable relations is in the best interests of both countries. So part of this ongoing thawing of prior hostilities there. Let's see if it translates into anything positive on the trade front. We have had a piece out from the PBOC saying they are going to start borrowing treasury bonds from primary dealers in open market operations. And what they're going to be doing with these bonds is potentially selling them on the secondary market. In a statement, they said they decided to borrow bonds from some dealers in order to maintain the steady operation of the bond market. Apparently, they've seen some probably more domesticated safe haven flows into bonds, which has obviously seen yields dropping. And they supposedly are worried about the financial stability aspect of that. So if they see any untoward moves in yields, they can go ahead and sell tons of these bonds that they've borrowed and thus stop yields from falling too far. This has come on the back of a few weeks ago. We had some talk that they were going to be in the market to buy government bonds, their own government bonds, which sounded like a bit of QE. So I don't know if this is a bit of a mix and match of that prior story. In one sense, it's a bit of YCC, but more yield control rather than yield curve control, though they'll probably be trading across the duration there of the curve anyway. So anything you're taking from that at the moment, Kay?
Yeah, I think it's part of what we saw last week. They think the market or what they have been sending as messages to the market has been taken a little bit too literally, and now they want to avoid probably too much of capital flows and trying to curb those things a bit. So yeah. That is the way I take it anyway. So yeah, keep things on the leash as they usually do, even when they are in the process of letting things go a little bit.
Yeah, I think because it's more domestic led, it's not got too much of a reflection on the currency. Certainly, we're seeing no real moves in the currency in the yuan at the moment. So yeah, it's something to keep an eye on, but I don't think it's FX strongly related for that. So moving on, Japan, we finally got this revision to Q1 data, got knocked down to minus 2.9% from the minus 1.8% we previously saw. This was due to a bit of a rehash of the construction sector, if you like. Some numbers they got wrong or whatever there. So that's been the big revision, down 2.9%. But as we've been saying, the market and particularly the Japanese already looking through that into Q2 data. As such, some of this data is showing AOK, the Tenkan index, which is a big manufacturing industry index, up 11.1% for the capex there, versus that's investment versus 4% previously. The all industry capex less negative than before, but when you look at the indexes in a whole, and these are Q2 numbers, a big improvement, 14 versus 10, 13 versus 11. Even the non-manufacturers looking okay, still 27. Was expected to rise, but still came in matching last month. The large non-manufacturers index as well, there or thereabouts. So these Q2 numbers, as we're saying, coming out fairly positive still. A little bit negative for the small number of manufacturers there, but overall it's good. You know, these big manufacturing sentiments has hit the highest level since March 2022, says the BOJ. So stick all that Q1 stuff in the rearview mirror, focus on Q2. ECB's Villeroy says that the June inflation data shows that French disinflation is on track. Not that you'd know it from some of the PMIs this morning that we'll get to now. So again, PMI data coming in from around the grounds. We're seeing Australia a little bit softer, well, much softer actually, 47.2, was expected to come in 47.5. So it came in much worse and still in contraction there. Coming over to the Eurozone as well, a lot of data out this morning. Spanish manufacturing 52.3, so that's gone backwards a bit again, missing expectations to the downside. Italy with a little beat on that number. France beat on expectations, but still another fall down, confirming the fall down, shall we say. Germany pretty much the same from the PMI data. It's all the way down here. Where is it? No, I missed it. There we go. 43.5. So it improved a pip, but still down nearly 2 on last month. Now, the overwhelming theme from some of these PMIs, particularly Spain and Italy and France, is that price pressures remain. Input cost pressures for Spain, I think, were up the highest in 2 years. Italy up in the highest in 1.5 years. However, output prices are struggling. That means because of lower demand, competition, Spanish and Italian firms are finding it harder to pass those prices on. So that's going to become a bit of a stagflation issue for those. France, in the meanwhile, has seen highest price rises for both input and output prices. 15-month high for input, 17-month high for output. I believe it might be the other way around. Either way, there's still high inflationary pressures there. Germany, on the other hand, are going the other way. They're seeing softer input prices and softer output prices. That's really coming due to a really weak demand picture, as you can see from that 43.5. So for the ECB, the bumpy road for inflation might be getting a bit bumpier, although there is some offset, as said, from Germany in there as well. So how that's going to play out into this week's CPI and then translated forward to the July ECB meeting, we'll talk about now. Germany, we've had the regional numbers in, all mostly coming in softer than previously. There was a couple of sticky points, Bavaria, but some of the bigger numbers like North Rhine down to 2.2%, and that's one of the bigger regions in Germany that will have an impact. So mostly all coming in softer, which is good news for the ECB. Not so good news perhaps for Germany, as we say, maybe get into a bit of a deflationary scenario. The pan-German number will be out later at 1 o'clock. As you can see there, those expectations may be about right, might be a little bit softer on the CPI. HRCP should be there or thereabouts. If we add that into all the other CPI numbers we've seen last week, particularly France, Spain, Italy, which all showed marginal or half decent two pip drops in CPI. The CPI numbers for the Eurozone on Friday should be around expectations, and we'll look at those in a moment. That probably means that we can rule out a July cut from the ECB, and they'll all sail off on holiday soon after. Kate, anything to take from the Eurozone data or anything else this morning?
Well, if I combine CPIs and PMIs, it's still not going too well in Germany, and the rest muddling on. And we know the manufacturing has been the weaker brother of the family, right? So I think we need to see what the rest of the data bring, but yeah, I think sort of kind of business as usual, but the picture in Europe is not really improving that much on the manufacturing side. So that is what I take from the data anyway.
Yeah, pretty much agree with that, mate. Right, let's move on. We'll look at what happened last week, quickly from the US data, and we've got a bit out of Canada as well. So the main item on the menu last week was the PCE, which disappointingly for trading purposes came out exactly as expected. Core down to 2.6. The headline also down to 2.6. This one very rarely has a big variation to expectations. It's pretty well guided, shall we say. But what happens in everything else, we'll have to wait for CPI in a week or so's time to get the next June numbers, which people say that this is the Fed's measure, the PCE, but for market moving purposes, the CPI is usually the main market mover. So again, going the Fed's way, albeit slowly. Some of the other numbers looking half decent as well. Spending came in at 0.2, missed expectations, but was better than last month. Real spending, though, better at 0.3%. So again, no real signs that the consumer is in any trouble, though retail sales have been painting a bit of a different picture recently. Over in Canada, they had some monthly GDP numbers coming in there pretty much as expected. April numbers there, 0.3%. They've got a preliminary for the May numbers at 0.1%, though this data does lag quite a bit. Over in the Michigan, we had the Michigan survey. A bit of an improvement over the flash numbers and an improvement over last month. So that was those flash numbers came down a bit, but they've pulled some back in the final numbers here. These inflation numbers, though, will be good news for the Fed. We saw that tick up in these numbers, but they've come down in the 1 year and sort of come down in the 5 year. I think it was 3.1 in the flash, so it's dropped back to what it was last month. Still with a 3 handle on, so still some stickiness in those numbers there. Over to the Fed heads. Barkin says will proceed deliberately on policy, still believes that there's some lags playing out and policy tightening will eventually slow the economy further. Daly says inflation data shows it's cooling and policy is working as expected, although inflation is still too high. It says we'll continue to see inflation printing above 2% through 2025. Also said the labour market is extremely strong, even with some slowing. One of the big hawks, Bowman, said we have strong employment, but haven't quite reached the inflation goal, hasn't reiterated her stance on the potential for hiking again. Right, over to La France for the mess that is the French elections. So it's pretty much gone as we've been seeing from all the polls over the last couple of weeks or so. Le Pen's RM party taking the lion's share, the new Left Alliance taking second place, and Macron hanging on the coattails just about in third place. what this all is looking like is that it's going to be a three-way fight in the second round, which is going to increase chances of a hung parliament. Because what's happened at the moment, it seems that all the parties who aren't the RM parties are on the offensive to stop them getting a majority. Now, what that can mean is that there's going to be lots of deals struck this week between different constituencies. So what might happen is if there's a three-way fight, RN, the Left Party and Macron's party or whoever, someone may step out to give that other person the best chance of fighting against the Penn's party. So rather than having a three-way vote and the votes being split three, one of the smaller parties may step out the way to let the second biggest party try and get those votes to then get the numbers above the Penn's party. All in all, it's looking like it's going to be a bit of a mess. So we may have to, again, wait to see what happens this weekend and then make a judgment call on next Monday when we start getting the results and whatnot. In terms of the result today, we've obviously seen the euro in a bit of an uplift. It looks like what's happened is that the market has really done all its pricing previously. When the election was announced, it took it a bit negatively. We've had all those polls, so there's been no shock from the final results compared to those previous polls. So it's a bit of a sell rumour buy fact type situation. But also, this is really French centric, if you like. It's not a Eurozone problem. It's not a Europe problem per se. It's a French issue. So it's been pretty contained. So really, you're going to be wanting to look at French assets to see the overall reaction. But we've had a bounce in the CAC. I'm not sure whether that's going to last, depending on the situation next week. We're certainly not at the end of this road just yet. As you can see already, that positivity is already waning at the moment. So can kick basically till next week and see what mess ensures after that. Then we'll be looking more probably from the longer term perspective of what happens there, policies, hung parliament, that sort of thing. Kay, any thoughts from you on this election stuff?
It'll depend who is going in ship with who in the second round. For those who try to make deals, because as I've been saying a bit already, the left is the further left from Macron. If they start to make deals, it depends what they want what they want in return, because that could get very messy and actually be even counterproductive to try and fight Le Pen if some of Macron's elected need to go together with some of those extreme lefties. This could really get very messy, in my opinion. And as you say, the market short into the French elections, it's kind of a bit strange. And on Friday, I said, there would be a bit of a surprise if we get through that 107.25.30, because the market is probably running short. And you open this morning, and the elections are as expected, and the euro rallied because the market is just short of it. And I don't know. It would probably have weighed more on the euro if either there would have been a possibility of an outright majority already, or if those far left candidates would have had even more votes. So so the market needs to revise its positions a little bit, but it doesn't take away from the fact it could again get very messy over that second round. And I would say, especially if Macron doesn't succeed to find, or his elected don't succeed in finding enough support, then it could get a bit messy for all things euro, CAC, and whatever spreads between France and the rest of Europe. could all get messy again. This is first round, as we say sometimes in market as well. First round effect. Let's wait for the next wave to roll in and see how clean or dirty the water will be.
Yeah, exactly. But it should be noted how this is going to play out. This isn't about the other parties actually getting a majority. It's just about stopping Le Pen's party from getting a majority.
Yeah,
As things
keep
stand
Macron
now,
in the house.
yeah, as things stand now, Le Pen is still likely to get the lion's share of Parliament. It's just whether she gets this majority and Bardella, the potential PM, gets the majority. That's what the market's going to be looking at now. But whatever happens, Le Pen could still be the prominent party in Parliament.
Sorry, and running forward on the events. This could be like a lame duck government coming, and France going into a gridlock situation where they can't decide about anything anymore.
Yeah, and then if that again, that's when we start to look at what the future holds, and if we're in a hung parliament, gridlock, and if it's gridlock European and French style, it'll probably go on for months and months and months, and they'll have to agree every single policy between whoever. This will be something that folks like rating agencies will keep an eye on, and if they start downgrading France on that on the politics there, that can cause investor flows out of France, because some funds and institutions will only put their money into sovereign assets of a particular rating, so that will potentially cause some outflows. So there's going to be a whole lot of knock-on stuff, but we'll have to take it, one bit at a time. We'll trade the initial reaction next week, and then we'll look at the longer term possible outcomes for France and indeed Europe if it starts hitting the euro and whatnot. But that's this week to go through anyway on the election front. We'll have a look at it's a busy week anyway this week. It's a little bit small because I've just zoomed it out a bit to fit it all in. PMI week, as we know, so we get the US stuff coming as well. ISM manufacturing today, so we need to keep an eye on that one, looking at all the bits and pieces, components, prices, employment, that sort of thing, because it is obviously jobs week as well. We get JOLTS tomorrow, and Eurozone flash CPI readings. Again, I don't really see any big variation to those, given what we've seen from some of the country's numbers last week. I did say it was late this week, but it's not. It's tomorrow. On Wednesday, we get a bit more data out as well. Obviously, some more PMIs dropping. We get the services numbers, ADP, Challenger, layoffs from the US, and then we get the ISM services numbers too. So everyone's going to be jumping around those. On Thursdays, those of you trading the Swissy, we've got CPI data out from those guys, are England's next opponents. So we have to keep an eye on the old clockmakers over there. Then on Friday, it's all about jobs again, because we get the employment numbers from the US latest jobs report, and it's double bubble with the Canadian jobs as well. So busy week in the data. Again, we're only going to be trading up and around the calendar for central banks. So don't expect any huge moves. We can but hope for some big variations in the numbers. For me, it's just going to be watching the ranges once again, seeing where we go with this euro, seeing what the dollar wants to do, yields and the like. Anything in that lot you got your eye on, particularly, Kay?
Ryan, what I'm especially a little bit concerned about is UK goes to vote on the 4th of July. We've got the 4th of July holiday in the US, I guess. Just quickly.
Oh, yeah, and the UK election. Yeah, I forgot about that.
And the UK election. And then you have on the Friday, you have the US job report where most of the US will be having a long weekend. So my biggest worry is not actually the numbers, but the liquidity that we will have going into those numbers, which could be absolutely miserable. That's actually my biggest worry for this week is rather it's fine to have numbers which could drive the market, but can we even trade it in time, you know, or can we even trade it at reasonable levels? That is what I thought. Waking up this morning, I said, do I really want to be around on Thursday, Friday? Yeah, this is what is my concern. And then, if I may, we are from today, tomorrow, and I think until Wednesday, ECB has its annual powwow in Sintra in Portugal, and tomorrow we have a discussion with Powell. So that's the other one that I'm going to keep, and I trust the market will listen and dissect every single word that Powell may say, especially if he would relax a little bit of the wording, I'd say, because they on the last FOMC, the market raised a few eyebrows that the about the dots being so tight with the CPI that we got just hours before. I think the market is going to dissect every word to see if he starts to say something like, "Oh, I wasn't confident, but my confidence is building." You know, then that would actually be a big market mover.
Yep, exactly, mate. And yeah, we'll keep an eye on those ones. I can tell you one thing: after these central bankers will have one eye on the summer. Don't forget that after the UK election, the BOE will be unlocked, so they may be itching to get out and about with some calls. Probably have to wait until Monday or the weekend, perhaps, after we get the final results all through. So they'll all start coming in from around about 10, 11 o'clock at night in the UK. We'll start getting the first results coming through, which would be a bit of an early indicator on how things are going to go. So I'll have my ear to the ground, no doubt, on that one. And as Jeff just reminded as well, we did have South Africa, Ramaphosa finally putting together his cabinet, or, you know, long story short, his government going in. Now, I don't know a lot about some of the names that have been put forward, but the cabinet has formed. Dollar Rand has seen, or the Rand has seen, a bit of gains on the back of that. So we might as well start there, shall we? We'll have a look at Dollar Rand. We had a little mosey under this 18 level. Interesting that this 1810 was support pretty much for the latter part of last week, and we've opened below it, and it's already resistance. So that's looking pretty significant. Again, this is a situation where we've come through the waves of what's happened in South Africa. A government is in place. I think the question, Jeff, moving forward is how long will it last, this national unity? If you was a gambling man, given the history of South Africa, you would expect there's going to be bum fights in the not too distant future. So I'd be cautious about how much the Rand can gain, because once we get through the election and they've actually got to start voting and pushing through policies, we'll have to see whether they go through easily, or whether, as I say, there is going to be a bit of an argument, bum fights and whatever. And then you've got to look at the longer term picture. Are they really going to change anything? If we get early signals that they're not, they're still going to have problems with infrastructure, power, and the like, we're back to square one. And square one isn't a lower Dollar Rand. I'm still long a little bit. I've tightened my stops up just below the 90 level. They were down at 1770, a bit out the way, but I'm just going to tighten up. I've made my money pretty much on the move up towards 1850, so don't want to give too much of that back. So I'll just rely on the levels down here, which have been in play for quite some time. If we do get a break, if we do get below 18s and we do see a proper break, then I think we're probably on for a test down towards the 38.2 fib again. That's been a decent support and resistance point all on its own. So that'll be the next big level to look at. Jeff says it's a very pro-biz cabinet overall. Thank you for that, mate. Good insight. As I say, it may be pro on paper. Getting stuff through is a different kettle of fish over there. What's your thoughts on the round this morning, Kay?
So the DA got sort of what they wanted in the last minute discussions. The issue that I see now with all of it is that some of the cabinets and some of the ministerial portfolios have been renamed into different stuff. If you look at what the DA got, they got education, communications. Okay, home affairs is a biggie. Then it's forestry and fisheries and public works. I mean, okay, somewhere ESCOM and Transnet will be in there. And okay, Steenhuisen got I think the deputy role, right? I'm just going through.
Yeah, there was 2 finance ministers appointed, wasn't there? Which
yeah, because the old finance minister is still in there as well. So on the face, it's a decision that is, yes, pro market because the DA is in there. The problem is the agriculture. He got agriculture, right? He got agriculture. I mean, yeah, but I was looking at the other posts that the DA had. Matthew, Matthew. I was just reading through the article again. It's on the face of it, yes, but we need to let the market decide now in the next couple of days, and perhaps listen to what the others are saying about all of this, because again, as I said already a good few times, problems with ESCOM and others are not going to go away that soon. So I think the market now needs to see really what they decide, what is going to be really pro market, because I mean, forming a government is one thing, making the decisions and putting the shoulders equals money behind it is the next thing, right? So
yeah.
I'd say we can hang around here for a while, but South Africa is not completely out of the woods. I'm going to be very interested actually in knowing what this government is going to do towards its relationship with Russia and China, because I can imagine that the DA is not really of the side of Ramaphosa, who made the decision to side with China and South Africa and Russia. We know that Putin sent him these personal congratulations when he got re-elected. So it's a bit of a mix of things that I'm going to listen to before making any more decisions. In the meantime, we've seen that still looking a little bit fresh below 18. We're seeing bits creeping in. That's probably going to be your pivot to start the new governmental situation in South Africa.
Yeah, very much so, mate. And you know, for some of you guys who are you know, a bit less experienced in these sort of things, you know, you've been blessed actually. We've been blessed actually that we've got 3, you know, elections. Well, more than 3 elections. We've had Mexico as well, so we've had a spate of elections. So you get to see how markets trade over elections. You get all the pre-election volatility, shall we say, which is more short-term opinion polls and first rounds and election news, and then that's all short-term. Then you switch into longer-term. What are these governments going to do? How long are these governments going to last before things start blowing up? So on and so forth. And all these elections follow the same thing. They all have the short-term volatility around the election, then your longer-term trading, the course of the government, shall we say, the term of the government. So they become, in essence, 2 different trades. You can't have the same thinking past an election that you have over an election. Okay, so if you're trading dollar rand or anything rand over elections, or MEX or euro, whatever, you need to know that the trade will now switch to something more longer term. Okay, and that's the sort of news that you're going to have to keep an eye on if you want to keep trading it. Trade the levels, levels are levels, no matter how you trade them. You know, no matter what the news, a level will either hold or it won't. But know how things transition between short term and longer term for that. And yeah, this is all experience. So everything you're going through now is the experience that me, K-Man, Blake, all the others in our chat room have been doing this for years. You get to learn. So the next election that comes up, you know how to trade it. Trade short term first, long term afterwards. So learn. This is your experience. This is what makes you an experienced trader, alongside the experience that we have as well. Right, where should we go from here? Dollar yen, we'll have a butchers at that because that's off to the races once again. We're pushing up back into what's that doing now? That was something I was highlighting last week. Let's get shots of that. We're up into the 161s again, not quite getting up to challenge Friday's high, but we're on the move once again, finding definitive support into this old broken area. This 160.20, which was the old 1990s highs and back to the 80s as well. So we're keeping the pressure on for the Ministry of Finance. Keep an eye on this for the volatility this week. We know Kanda, even though he's shortly heading out the door, we know he said that this was all speculative. That makes it a different ball game. So we are still on intervention watch. If you're seeing this move, 150, 200 pips in a session, then we're going to be very close to them potentially hitting the button again. Where it goes before they do that is anyone's guess. Look at your long-term charts for that. 163s is the one on my radar. Some of these big fibs that we've got up here, 163.80s. So big long-term fibs that we're showing up here. Again, another big high up there as well. So yeah, keep an eye on all that stuff. Well, that's a big high we've already just surpassed. So yeah, keep an eye on your longer term charts for this one, just to see the potential levels that we may run into trouble. But otherwise,
we lost you, Ryan. We don't hear you anymore.
Hello. You got me?
You're back.
Yeah, I'm back. Euro, that's recovered, as we see. A little bit of a gap there for all you gap traders who like such things. I don't give two monkeys about gaps, to be honest. Market's going to do what market's going to do, irrespective of gaps. We're still in the ranges. 107's likely to become firmer support now in this move. 108 is going to be our main resistance up there. 107.95, 108.10, that zone there. Now I think we're just going to go back to swinging with the data. I don't think the euro is potentially going to have much more interest in the French elections. As I say, it's probably going to be more French asset related than other things, but we'll keep an eye on that news anyway. Any mention of Frexit or anything like that from Le Pen's party will get the market sitting up, no doubt. But that's seemingly a low risk at the moment of that. So back to range trading this one, swinging with the data on that. Euro sterling's looking interesting. Another one that's bounced, but it's run into the brick wall that was the former support area at the 85 handle. I did have a little short 61s last week, just a bit of an election play, but as it quite clearly turned into sell rumour buy fact type thing, I'm offside on that. I've had a little tap up here at the big figure as well, just to play the level. So neither trades are big, so I'm happy to play it. We're not talking lots of pips here. 85.15, I'll be out of both those trades, but we'll see what's to come from the UK elections as well. Could get a bit of stability from that if Labour take the big majority they're projected to, which could mean a bit of pound buying in reaction to that. But we'll see what happens. I'm not going to lose any sleep if I get busted out of that one. Another one that I'm still keeping a little bit in is the Kiwi. Still can't get and hold its nose above the 61 level. Got an area here around the 61, 61.10. So need to get a move back above there. While we're below that, it does keep the downside in play. Although we're looking at a bit more sideways action, but you can see we've had a short-term downtrend. Still got the lower lows and just about the lower highs coming in. So it's still got a little bit of a bearish tilt to this one. So it's touch and go. Whether we get another move up towards 61.5, maybe even 62s. I think if we get another move down through this level, then it's going to be curtains, and we'll probably see further downside, at least to that 50 fib, I should think. Kay, I'm going to punch it over to you, mate.
Stick on that Kiwi for a sec. I mean, because I've entered a really small long this morning as well, and I'm actually looking relatively at the same zone, that blue zone to hold. But I've got in like really small. I'm looking at that 61, 10, 12, 15-ish stuff. If that starts to go, then I'm probably going to press the button a little. Yeah, I can take it over from here. Just to let people know that I've entered just a small because it and I'm going to look at that blue zone for the shorter term, but I'm also going to look at stuff a little bit perhaps more longer term coming. So could be that I'm potentially building on something here, but we will see how the start of the second half of the year goes. So basically, Ryan's blue zone is somewhere between those red line here plus an extension down to 60, and if that would go, yeah, then it's probably going lower again. But look at this. This has been trading this trend line ish, and I think if we get back above, which will also be Thursday's high, Tuesday's kind of low before it broke, then we could go back into this zone, and then we will see how it goes for the more long term. I need to just a quick overview of those rates, because could still be that this is like the start of half two of the year. If you look at, perhaps I should go on a bit smaller ones. We see on Friday already we saw a move back up in those yields, so a move lower in the bonds, and we again trying to break above 440 in the tens. But we see it on most of those yields. They are trading a bit higher, and I don't really know why. It could just be like the start of half two, as I said, because I don't see too much in the fundamentals. We don't have, barring the really short term, we don't have a big bond issuance program this week. So I'm going to be very interested to see what's happening in the US when they open, and I'm not in big positions because I'm a little long cable and Aussie as well, but I mean it's less than what I had on Friday into the last day of the month and quarter, and I've already let some go this morning. Well, an overnight order at 126.80 on the cable as well. So I'm really having very small positions now. But I'm in the mood for perhaps looking at a little weaker dollar, perhaps if the data support what I'm thinking, and those yields are coming back off a little bit. It's very tiptoe positions and keeping everything small, so not to put my account in danger at all. But if you look also at the differentials, we had this jump in the EU versus the dollar. I think it's all positioning, and because now when we look at the euro, for instance, we are gradually losing steam here. Okay. I think we're in the situation where we do the short covering. Everything is relatively as expected. Market over positioned. I've also seen market was short euro sterling, which explains the move we saw this morning. But it all seems to me like it's starting to ebb away a bit. And yeah, I don't think the euro has much more in it than if the US needs to short cover, we could go up to 107.90s, 108 perhaps, but then I don't see that anything in coming out of the weekend of those French elections. I don't see anything that would support a much higher euro, and as well in general, whether it's euro dollar or euro crosses really. So it's all over to the data. This little area here, I think, is going to be relatively interesting. Yeah, people talk about gaps, but as Ryan already said, we here do not believe too much in gaps, not at all. But do look at the because it was a bit of a level, regardless. Look a little bit at what's going to happen if you get back to 107, 2027, call it 2030, okay? Because it has been an area of interest on rebounds, or when it goes through, when it went through, it accelerated and things like that. So keep an eye on what's happening here if we come back to rest on it, which is very, very possible in my opinion. And I don't really. It's still a tough one. On the dailies, if nothing else happens, we could have a look at 162.5. Is still very, very big. And if you look at the all yen pairs, or most of the yen pairs, they look exactly the same. Went out of wedges or channels, and we are trading, continue to trade above. I don't know what they're waiting for at the MOF. If they're just going to let it go and let the Bank of Japan decide or try to curb the yen strength, but that is still going only to come in at the end of July. I think the market is just not ready to buy yen because it's still too much of a funding problem, especially with all those yields, as I've showed a little earlier, ticking up this morning again. So that is not helping the yen in any shape or form. Aussie, we are still struggling with those highs, but we are in this triangle. Both ends are holding. I think the low 66s now stretching to that 65.80 is going to be very important on the way down. Equally important, I'd say, is if we start to break above this 67.10, because then I reckon we could be off to the races in some way, at least up to into 68s. Why not even up to 69? And this is something, as I said, I'm going to keep an eye on what the US data tell me. I'm especially going to lend a very interested ear to what Powell has to say tomorrow, because regardless whatever we had on the dots, on the comments, on Bowman or whoever was talking, if he says something that would say that he finds a little more confidence, I think the dollar pairs could be in for a bit of a reset. I'm not saying it will happen. We are traders, and that's why I'm keeping my positions very low, not to run into heavy risk. But it is possible. It is really possible in my opinion. What else? I don't have to. Oh yeah, I had to look at the metals. What I was saying this morning is that despite all those yields ticking up, and okay, there was a bit of weekend risk. I'm not saying that it had to happen between Lebanon and so, but we saw Western countries trying to tell their citizens to move out of perhaps Lebanon and so on and so forth. But it's not got worse, thank God, for now. But it's still a possibility. But with the weekend out of the way, I would have thought with the higher yields that gold may have, or the metals in general, may have a little bit of a deeper setback. I'm not saying down to below 2,300 for gold, but at least get a little bit lower and give us an opportunity to reload sub 23 perhaps. but it's not, and it's actually keeping up relatively well. We're in a range, right? We're still in a range, but keep an eye on what's happening if ever we get back above 2340 and then 2350s. What would happen there if anything is going to happen? It could just flatline here until we get more data. Okay. And really, that's it for me for today, Ryan. This week is going to be a very interesting one. Perhaps a lot is going to happen on the Swiss side of things as well. The dollar Swiss, for instance, that's the other side of the dollar. If we start to break above 90, 1020, it could perhaps accelerate. We are there. Okay. I do think it's happening more via the Swiss crosses than the dollar Swiss right here and now. But it could mean that we reaccelerate up to 91.5 if it's a dollar thing. Okay. And with that, back over to you, Ryan.
Thank you very much. As always, mate, good stuff as usual. Yeah, another week. Just swing with the punches, folks. Watch your data points. See how markets move, any game changers, not game changers, and just trade accordingly. Don't marry a position. If you see some profit, take it off. Take some off. Maybe just leave a little bit on to see what else happens. On that note, we shall call it a day. Have a great day. Have a great week. And we'll see you all tomorrow.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.